Thank you very much for having me today, and thank you to the Gold events team for the opportunity to present at this excellent conference. Today's presentation will provide the audience with an update on gold exploration trends, market dynamics, and key indicators for the sector. As you've heard over the last 2 days, this month the London Bullion Market Association gold price hit an all-time high, closing at over $2,530 US per ounce. This growth was driven by cooling inflation in the US, weakening labour market figures, and prospects of interest rate cuts in September. In the semi-annual Monetary Policy Report to Congress in July, the US Fed conceded that there had been significant progress made both in lowering inflation and in cooling the labour market over the past 2 years, with the June inflation rate dipping to 3% and unemployment ticking up to 30-month highs of 4.1%. These developments, combined with an expected interest rate cut in September, have continued to drive up the gold price. Central bank gold purchases moderated in May due to elevated gold prices, especially in non-US denominated markets. Net purchases of gold fell 56% month over month, while gross sales were steady. China, notably, did not add to its domestic reserves in May and June, according to the World Gold Council. Physically backed ETF flows have continued to be positive, with overall demand more than doubling. Inflows of European funds to gold accounted for the bulk of the demand, which was stimulated from the first interest rate cut by the European Central Bank in 5 years. Countering this, North American outflows jumped 4 times due to the strong US dollar. Gold commodity exchange long positions have achieved 4-year highs, which is a clear reflection of strong sentiment in the gold futures market. Bar and coin demand, as expected, has declined due to higher gold price. The US political landscape will remain a driver of the gold price throughout the year ahead and beyond. The lead up to presidential elections has historically supported the gold price, with the recent events adding unease and reinforcing gold as a safe haven asset. On a forecast front, we see news, geopolitical tensions, and macroeconomic events continuing to drive the gold price throughout 2024. We expect the price to correct periodically on profit taking, with our forecast average price to sit around US $2,350 per ounce. We expect gold supply to peak in 2026, with most of this increased production coming from Australia, Canada, and the US. Gold supply is expected to begin falling in 2028, which is due to decline in supply from these key countries. On a project level, we have recently completed our annual analysis of major gold discoveries. There have been 350 deposits discovered since 1990. For this study, we categorise a discovery as containing over 2 million ounces of contained reserve resource, incorporating past production. As you can see from the chart, gold reserves continue to decline, with a lack of significant replacement occurring, which is despite healthy gold exploration spend. Exploration in many cases has been focused on expanding resources at brownfield operations, with less greenfield exploration occurring. Since 2020, there have been only 5 major discoveries recorded globally. Recent discoveries are scarce and smaller in size, with an average of 3.5 million ounce discoveries occurring compared to the 5.5 million ounce average from 2010 to 2019. None of the discoveries made in the past 10 years have entered the list of the largest gold discoveries. On an equities front, looking at the total return for ASX gold explorers, developers and producers over the past 6 months, there is a clear deviation in relative valuations. This will continue to present M&A opportunities for producers, while for gold investors, potentially strong equity growth opportunities. Looking at the M&A space, gold acquisition demand continues to increase, with the following significant corporate and project level transactions closing since January 2023. The recently announced $1.5 billion acquisition by Goldfields of their remaining interest in Osisko Mining will enter this list once the deal closes. Looking at the gold development pipeline, this chart displays primary gold projects with greater than 5 million ounces reserve resource in a development stage globally. On a country basis, Canada is the standout, featuring around about 64% of the development ounce pipeline. These numbers are somewhat distorted by the massive 160 million ounce KSM, somewhat low-grade project in British Columbia, Canada. It is interesting to assess the various risk rewards of developing projects in higher risk jurisdictions around the world. This map overlays the operational, economic country risk applicable to each region. A number of these key gold development pipeline projects fall into locations we categorise as presenting significant operational risk. Regis Resources may have an argument that the risk score for Australia should be higher. In summary, the US political landscape will remain a key driver of the gold price throughout 2024 and beyond. Declining gold reserves and gaps in significant discoveries being made will continue to impact long-term supply, while the disconnect between the relative value of explorers and developers versus producers will continue to present M&A opportunities and potential value for gold equity investors. Thank you.
Thank you.